All right, welcome to The Explainer. Today we're tackling something that is a huge but often invisible threat to your money, the lost notice disaster. And we're going to show you why a super simple piece of paper, an IRS change of address form, is actually one of the best tools you have to defend your finances. So think about this for a second. What if the absolute worst letter you could get from the IRS is the one that never even shows up in your mailbox? I know, it sounds kind of backward, right? But it is absolutely true. A simple little mistake, like a notice going to your old address, can kick off a financial nightmare you won't see coming until it's way, way too late.
And listen, we're not just talking about a little slap on the wrist or a small late fee. We're talking about a domino effect, a chain of events that can put your entire financial life on the line. This is especially dangerous for anyone over 50, folks in the longevity economy, because you've worked hard to build up assets. And those assets, they become the prime target when this system breaks down.
Okay, so how do we stop this from happening? Well, first, we've got to understand how it happens in the first place. We're going to do a little forensic autopsy, if you will, on this whole process. And it all boils down to one single, really important definition from the IRS's own rulebook.
So here it is, the last known address. This little phrase is the absolute heart of the problem. See, the IRS legally operates based on this address. But here's the catch. There's this huge, dangerous gap between their own strict legal definition and the reality of how long it takes them to process things. And that gap, that's the trap. Let me show you what I mean.
This right here, this is what the pros call statutory friction. It's a fancy term, but it's pretty simple. The law says that as soon as the IRS mails a notice to that last known address, it's legally considered delivered. It doesn't matter if you ever actually see it. Now look at those processing times. A new address from your tax return can take over 45 days to get into their system. And during tax season, forget about it. We're talking mid-July. That delay creates this massive window where you could move, they send a critical notice to your old place, and boom, legally, you've been notified. You've just lost your right to respond, your right to appeal, all because you didn't even know there was a problem to begin with.
But wait, it gets trickier. The problem isn't just about those slow processing times. As we're about to see, some of the very tools we all use to make tax time easier can actually hide another big hazard, what I like to call the software trap.
Okay, this slide is huge because it reveals a massive, and I mean massive, false sense of security that millions of us have. We all assume that when we update our address in TurboTax or H&R Block, we're all good, right? The IRS knows, but that's not necessarily true. That new address might only be used for that one specific tax return, not to update your main file, your official master file with the IRS. The only way to guarantee they have your new address for good is to file a separate form.
And this is where a simple little oversight can snowball into a giant problem. A mismatch between the address on your return and what's in the IRS master file, that can be a huge red flag for them. It draws unwanted attention, and it can even be the thing that triggers an audit. All of a sudden, a simple paperwork issue has turned into a major headache.
So, let's make this real. How does this actually play out for people? We're going to look at two taxpayers who ran into the exact same issue but handled it in completely different ways. Let's call them the failure and the architect.
All right, meet John and Sarah. Both own a business, both moved in July, and wouldn't you know it, both had the exact same deduction disallowed by the IRS. Now, John did what most of us would probably do. He told the post office he moved, maybe set up mail forwarding, and figured, hey, I'm covered. But Sarah, our architect, she took one extra crucial step. She immediately filed Form 8822. And that one little difference, well, it changed absolutely everything.
So the whole thing kicked off with this. A $15,000 business deduction that the IRS didn't allow. They sent a notice to John's old address, just like the rules say. Sure, it got forwarded, but it showed up weeks late, way past the deadline to appeal. John never even got a chance to fight it.
And because he missed that critical first notice, the problem just exploded. That initial tax bill quickly grew with penalties and interest. Then came the federal tax lien on his property, which crushed his credit. His business was on the brink of collapse. His total bill to clean up a mess he never even saw coming? Over $9,000. Ouch.
Okay, now let's flip over to Sarah's story. Remember, she filed Form 8822, so she got that same notice right away at her new address. What did she do? She immediately called her tax advisor. Her total cost to deal with this? About $1,000 in professional fees to handle it correctly and, most importantly, on time.
Look at the difference. By being proactive, she completely avoided all the penalties and the liens that crushed John. Not only that, but because she had time to respond, she was actually able to successfully challenge part of the IRS's assessment. Bottom line, she saved over $8,000. Her simple little asset defense protocol turned what could have been a crisis into just a manageable task. So the big question is, how do you make sure you're the architect in this story and not the failure? It all comes down to having a simple, standard operating procedure for your own wealth defense. It's not complicated, and it is incredibly effective.
Okay, here it is. Your 4-step defense protocol. Step 1. File Form 8822 right away, within days of your move. Do not, I repeat, do not just rely on your tax software. But pay really close attention to Step 2, because this is where most people stop. Filing the form is just a start. The real defense is in the verification. A few weeks after you mail that form, go online and request your IRS account transcript. You need to see with your own eyes that the change was processed. Don't just hope it worked, verify it did. Then, keep a log and do an annual checkup. Simple.
So let's end on this thought. Your address has changed as your asset defense strategy. Look, taking the 10 minutes it takes to follow these steps isn't just boring paperwork. It is one of the single most powerful, high-impact moves you can make to protect your financial future from a disaster you would otherwise never, ever see coming.